Hi, in this video I am going to explain final accounts with adjustments. So first let us see the problem. The following trial balance has been extracted from the books of Miss Alice Magnolia on 31st March 2014. So all debit items and credit items are given. Just see the adjustment. First one, closing stock 80,000. Second one, commission received in advance, rent not yet received, wages yet to be paid, salaries paid in advance, interest on capital at 6%, interest on drawings at 5%, interest on bank loan 300, depreciate machinery at 10% per annum, interest on investment 5%, write off bad debts 800, make provision for bad and doubtful debts 5% on debtors. The next one, provide 2% discount on debtors. The last one, provide 5% discount on creditors. With this information, they ask you to prepare trading and profit and loss account for the year ended 31st March 2014 and balance sheet as on that date after giving effect on the above adjustment. Usually, final accounts will be prepared only at the end of the year. So, final accounts which consist of three parts. First one, trading account, and second one, profit and loss account, and third one, balance sheet. So, while you prepare final accounts, you need to open all the accounts simultaneously, and before you solve the problem, let us see what are the item is there. So, with that, you can make some note of it. Based on that, you can proceed the problem. So, first one, closing stock is there. No, closing stock means current year closing stock. This will be opening stock for the next year. And commission received in advance is there. No, just see the commission and make a note. Put one mark for that for your reference. Third one, rent not yet received 1000 rupees. Put the mark here. Fourth one, wages yet to be paid 500 rupees. Put one mark for wages. Next one, salaries paid in advance. Put the mark here. And the next one, interest on capital at 6%. Put the mark. And the next one, interest on drawings. Put the mark. And then next point, interest on bank loan 300 rupees. Next one, depreciate machinery at 10% per annum. Put the mark. And the next one, interest on investment. Next point, write off bad debts. Put one mark here and then make a provision, same thing only. Provide 2% discount on debtors. It is also same with that. And the last one, provide 5% discount on creditors. Put the mark here. So now we have made some marks in order to identify. So while you prepare trading and P&L and profit and loss account, you can able to identify some machinery. So adjustment is there. You can easily incorporate all the adjustments while you prepare the final accounts in a systematic manner. So before you solve all these things, first you have to start the trading account. So you know the trading format, no? So trading account is nothing but it is just like a trade transaction. That is, trading means buying and selling. In trading account, you need to record only the production transaction. The expense which is directly involving in production is called trade transaction. That will be recorded in trading account. So trading account should be start with opening stock. Debit side, opening stock. Just find opening stock how much? 60,000 is there, no? Just enter debit side of trading account, 60,000. Then see, the last year closing stock will be current year opening stock. So current year closing stock will be opening stock for the next year. So you have to start with opening stock in the trading account. And after entering this, the second one is if you made any additional purchase during the year, that will be recorded along with the opening stock. The next item will be purchase. That is additional stock purchased during this year. Purchase is there, no? How much? 80,000. Enter in debit side of trading account. 80,000. Put inner column. Why? Because if there is any returns purchase returns will be subtracted. How much purchase return? 5,000 rupees. Purchase always debit side. Purchase return always credit balance. So subtract this amount from purchase under trading account. 5,000 rupees. Balance 75,000, enter outer column. So debit side start with opening stock and additional purchase made during the year, less returns if any. And next one is just see if there is any other direct means which is directly involving in production process is called direct expense. Wages is there, no? Wages means the amount which is payable to laborer. Those who are directly involving in production process, they are called as laborer. So any amount given to laborer is a direct expense. So how much amount is there? 10,000. We have made one mark, no? For what purpose? You need to refer the adjustment. So adjustment is there. How much my wages? 10,000, no? Enter debit side. To wages 10,000 rupees, enter inner column and just see the adjustment. Fourth one, wages yet to be paid. So what is the meaning of yet to be paid? Yet to be paid means outstanding, not yet paid. So let me explain one simple logic. While you consider adjustment, you need to follow a simple logic. See this. If any item decrease debit, enter the amount under same side, debit side. If any item which decrease credit, enter the amount under same side. This is the first logic. So first one is if any item, any adjustment which decrease debit balance, enter the same item under debit side. If any item which decrease credit balance, enter the same amount under credit side. This is the first logic. And second one is if any item increase debit, you need to increase credit also. If any item which increase credit, simultaneously you need to increase debit side also. This is the second logic. With the help of this logic, you can able to consider all the adjustment in a systematic and in a right manner. Let us see this example. So wages yet to be paid, no? Yet to be paid means not yet paid, outstanding wages. Any outstanding that should be added along with the respective account, whether it is income or expense. If it is outstanding means that should be added along with the respective account. For example, salary outstanding means add along with salary. Wages outstanding means add along with wages. Rent received, outstanding rent means just add along with that particular income. In the same way, you can use this for all expense and income. If it is outstanding means you can apply this. So wages yet to be paid, no, outstanding wages. This should be add along with the wages. We have already entered wages under which side? Debit side of trading account, no, just add. Outstanding wages. How much? 500 rupees, no, just add. Total 10,500. While you take any adjustment, you need to check with that logic. I have explained you know clearly. Just see. If you add this item along with the wages, what is the result or what is the impact which increase or decrease? Which increase the debit because you have added along with the wages, no? It means it increase the debit. What is the logic? If any item which increase the debit, simultaneously you need to increase credit. Credit means which account? In trading account you have added, no, this should be comes under balance sheet. Which side? Liability side. So you need to have one clear cut idea about the final account. Trading account you will have debit side here, left hand side, and right hand side credit balance. Debit side all expenses and losses, credit side all incomes and gains. While in case of balance sheet, just opposite. According to British accounting rule, balance sheet left hand side will be liability, right hand side will be assets. According to American accounting standard, this will be just opposite. Left hand side will be asset and right hand side will be liability. Now I am explaining according to British rule. Just see the balance sheet. Balance sheet as on 31st March 2014. Liabilities here, assets are here. So liability means always credit balance, assets always debit balance. Here you have added the outstanding wages, no? It means it increase the debit. Simultaneously you have to increase credit also. Which one is credit here? Liability is credit, no? Just enter this item under liability side. Leave some space for basic thing. Capital, all other things should be comes here. So leave some space and then you can continue all other adjustment. Outstanding wages. How much? 500, no? Just enter outer column. Then see any other direct expense in this problem. No, nothing is there. Then you can go to credit side. Credit side, first item will be by sales. Because you have entered purchase debit side, no? This will be like this only. Opening stock debit side, closing stock will be credit side. Purchase debit, purchase return minus, sales credit, sales return minus, and all direct expense will be entered in debit side of trading account. Now I have entered sales, credit side of trading account by sales, no? Just find the amount. How much? 1,20,000. I told you, no, sales is always credit balance. So sales how much? 1,20,000. No, just enter this amount under debit credit side of trading account, inner column, because sales return is there, no? So subtract sales return. How much? Just see the problem. Sales return 4,000. I told you, no, purchase is always debit side, sales is always credit side. If it is return means just opposite. Purchase return will be credit, sales return will be debit. So sales return 4,000, no? Just subtract this amount from sales. 4,000 rupees. Balance 1,16,000. Then, so we have entered opening stock, purchase, less purchase return, and direct expense, that is wages is given, and then credit side, sales minus sales return is there. The last one will be closing stock, by closing stock. You can find this amount only from adjustment. So closing stock means stock at the end of the year. This will be the first adjustment. Just see the adjustment. How much amount is there? Closing stock 80,000. Where you will enter this amount? Credit side of trading account. First enter this amount under credit side 80,000. When you add this amount in credit side, what will happen? Credit will increase because closing stock is entered credit side of trading account. The impact is this will increase the credit balance. Simultaneously, you need to increase debit. Where you enter the same amount? Balance sheet, asset side. Now come to balance sheet. Asset side, first item is closing stock. This amount you have taken from adjustment. How much? 80,000. Directly you can enter outer column. So now trading transaction is over. Now you can get the total. Just find the balancing figure. Check which side is highest value. According to this problem, we have got highest value in credit side. How much? 1,16,000 plus 80,000, 1,96,000. Put the same amount debit side also. So you will get balancing figure under debit side of trading account. How much? 50,500. This is called as gross profit. This will be transferred to profit and loss account. So this is a balancing figure. If we have higher amount in debit side means you will have credit side balance. So that will be by gross loss. So in this problem we have got gross profit 50,500. Immediately you need to transfer this amount to credit side of profit and loss account by gross profit. How much? 50,500. Now we have entered the gross profit under credit side of P&L account. Now we can proceed the problem. Just see the item. So what is the first one? Machinery. So machinery is an asset, no? We need to refer the adjustment. Machinery account 40,000 is there. So what is the adjustment? Depreciate machinery at 10% per annum. So what is the meaning of depreciation? Depreciation means decreasing the value of asset. Every year, every day, the value of machinery goes on decreasing, which decrease the asset. So machinery is an asset, no? Just enter this amount under asset side. Machinery how much? 40,000, and we have adjustment regarding this. So less 10% depreciation. How much for 40,000? 10% is 4,000, no? Subtract this amount from 40,000, you will have 36,000. What is the impact for this? 40,000 minus 4,000. The depreciation means decreasing the fund, no? Which means if any item which decrease the debit, you need to enter the amount under same side, that is debit side. So now you need to enter this 4,000 rupees under debit side of profit and loss account. Why? Because debit side to depreciation on machinery. How much? 4,000. Why we have entered this amount under debit side of profit and loss account? Why? Because profit and loss account is just like a nominal account. You know the golden rules, no? What is the rule of nominal accounts? Debit all expenses and losses, credit all incomes and gain. So depreciation, it's a permanent loss, no? So you need to record under debit side of profit and loss account. Now see the problem. So now we have entered machinery under asset side, as well as the adjustment will be recorded in P&L account. What is the next item? Cash at bank. It is an asset. Okay, enter this amount under asset side. Cash at bank. How much? 10,000 rupees. So no adjustment regarding this. Directly you can enter this amount under outer column. Next one, just see the problem. Cash in hand. How much? 5,000 rupees, no? So enter this amount under asset side. $5,000, directly you can enter outer column. Next one, sundry debtors. So in sundry debtors we need to refer adjustment. So sundry debtor also is an asset item. So enter this amount under asset side. Sundry debtors, how much? 40,000. Enter debit side, asset side, and see the adjustment. Here adjustment is there, no? Write off bad debts 800. So what does it mean? Bad debts means irrecoverable debtors. So generally debtors can be classified into different category. So who are all called debtors? Debtor means the one who receives benefit from the company without paying any money. In future dates they will make the payment. They are called as debtors. But the entire debtors cannot be good debtors. They can be classified into three categories. One set of debtors will be bad. Bad means you cannot recover amount from them. They are called as bad debts. And we need to make some provision for bad and doubtful debts. 5% on sundry debtors, which means bad and doubtful debtor means doubtful means may or may not be. They may pay or they may not be pay the amount. So they are called as doubtful debtors. So we need to make some provision for that. And after deducting bad debts and the provision for doubtful debts, the remaining amount, the remaining debtors are called as good debtor. Good debtor means they are ready to pay. They are going to make payment. So for them you can allow some discount. Let me explain again. Debtors. So first thing, you need to subtract bad debts if any. If there is any bad debts, subtract that amount first. You will get some balancing figure, no? And the first preference will be bad debts. Second preference will be doubtful debts. So doubtful debts means may or may not be. Just make provision after deducting bad debts. First you need to subtract bad debts. And you will have some remaining balance, no? On that amount you need to calculate 5% or 2, whatever it is. Just calculate that amount and subtract from this balance. You will get some remaining balance, no? This amount, they are called as good debtor. They are eligible to get discount. And after deducting bad debts and doubtful debts, the third preference will be discount on debtors. So just subtract discount, provide discount for good debtor. The remaining amount can be collected from debtors. So according to this order only, you have to make adjustment. You cannot directly subtract doubtful debts, then you cannot provide discount on debtors and finally bad debts. This will be the procedure. First you have to subtract bad debts if in case of any bad debts in the adjustment. Just subtract that amount from debtors and then provide provision for bad and doubtful debts, and the last one is discount on debtor. So this discount will be allowable to only those who are ready to pay. They are called as good debtor. Okay. Sundry debtors, inner column 40,000. Just see the adjustment. Bad debts 800 rupees. Just subtract this amount less bad debts. How much? 800 rupees. Just subtract this amount. The remaining balance is 39,200. Then next adjustment regarding debtors is make provision for bad and doubtful debts 5% on debtors. They are given like this, 5% on debtors. You cannot simply calculate 5% on this debtor, this amount, because we have subtracted bad debts, no, remaining on the remaining amount only you need to calculate provision for bad and doubtful debts 5%. So less provision for bad and doubtful debts. How much? 5% on this, 1,960. Balance 37,240. The next adjustment regarding debtor is provide 2% discount on debtors. How much? 2% on debtors. No, after subtracting bad debts and doubtful debts, you will have remaining balance. No, on that you have to calculate 2%. Just find the amount. 37,240 is there. No, on this amount you have to calculate 2% provision discount on debtors. Discount on debtors. How much? 745. If there is any point, you can convert into round number. After subtracting all these things, so first one is bad debt, irrecoverable amount. You cannot get the amount from these people. So it is called as bad debts, irrecoverable. After deducting amount, this is the remaining balance. On this, you need to calculate or you need to provide some percentage for bad and doubtful debts. 1,960. After deducting this, the remaining amount is 37,240. They are called as good debtor. They are ready to pay. For them, you can allow some discount. So 2% discount on debtors. No, on this amount you have to calculate 2%. 745 round value. So what is the remaining balance? 36,495. So according to this adjustment, these are the three items which decrease or increase. When you subtract bad debts from debtor, just see the problem. You have subtracted this amount from debtor, which means it decreases the debit. Why? Because it is entered in asset side. Asset is always debit balance, no? So all these three items which decrease the debit side. What is the logic? If any item which decrease debit, you need to enter the same amount under which side? Debit side. Just come to P&L account debit side. Enter all these three items which decrease debtor. So first one is bad debt, no? Bad debts how much? 800 rupees. The next one, 2, provision for bad and doubtful debts. How much? Just refer the problem. Balance sheet 1,960. Enter that amount here. 1,960. Then third item is provision for discounts on debtors. How much the value? 745. No, enter that amount under debit side. 745. So this adjustment is over. Next, see the problem. So all these things you have entered. No, what is the next item? Bills receivable. For bills receivable, there will be no adjustment. Directly you can enter this amount under which side? Asset side. This amount under asset side. Bills receivables. How much? 29,000. Directly you can enter outer column because there is no adjustment regarding this. Next one. So bills receivable is over. Next one, rent. In this transaction, the value is given both the side, debit side as well as credit side. Debit side means rent paid. So any amount paid to somebody, it is an expense. Okay. So 1,000 rupees given under credit side, no, this is called as rent received. So one transaction is given in both debit and credit means, which means debit means rent paid, credit amount denotes rent received. Just see the adjustments. We have made a note, no? Just see the adjustment regarding rent. Here is given rent not yet received 1,000 rupees. This amount, this adjustment is related to rent received. Rent received is given under credit side. How much? 1,000 rupees is there. Adjustment says that rent not yet received 1,000. Not yet received means outstanding. I told you, no, in the first adjustment itself, outstanding, any outstanding item that should be added along with the respective account, whether it is an income or expense. Outstanding means that should be added along with the respective account. So rent not yet received. Just enter that amount under credit side of P&L account by rent received. 1,000 rupees is given. Just enter inner column and adjustment outstanding not yet received. So outstanding rent. How much? 1,000. What is the total? 2,000 rupees. Just see the logic. Outstanding rent received. This is added along with the income. No. Just see this. So when you increase credit, we have entered this amount under credit side of profit and loss account, which means what is the impact? It increase the credit. If any item which increase the credit, simultaneously you have to increase debit also. Enter this amount under asset side. Why? Because asset is a debit balance. So enter this amount under asset side. Asset side, outstanding rent. How much? 1,000 rupees. Then come to the problem. Again, this entry is enter rent 5,500. It is a expense. Okay. So just enter this amount under debit side of P&L account. Why? Because profit and loss account is just like a nominal account where we used to record all expenses and losses. But there is no adjustment regarding rent paid. Directly you can enter this amount debit side of profit and loss account, outer column. Rent paid. How much? 5,500. So all these things have entered. No, closing stock entered under trading account credit side, balance sheet asset side. Rent also incorporated, wages also incorporated, and then bad debts, provision for bad and doubtful debts, and discount on debtors also over. Depreciate machinery also over. Now see this. Drawings. So this will be subtracted from capital. This you can do later. Next one, commission received. So commission received is an income. It is given under credit side. So it will be comes under credit side of profit and loss account. But we need to consider adjustment. We have made a note. No, you need to refer the adjustment regarding this transaction. So commission received. Where it will come? Credit side of profit and loss account. By commission received. How much? 3,000 rupees. Enter this amount under inner column. 3,000 rupees. And just refer the adjustment regarding this transaction. Commission received in advance. What does it mean? Commission received in advance mean income received in advance. If there is any outstanding item, that should be add. No. In the same way, if there is any income received in advance, that should be subtracted. Pre-received. Received in advance means pre-received. Pre-received, prepaid. Whether it is expense or income, if there is any pre-received or prepaid, that should be subtracted from the respective expense or income according to that. So here commission received in advance, which means income received in advance. This should be subtracted from the commission received. Just go to the P&L account. Credit side we have entered 3000. No, here according to the adjustment, commission received in advance. Commission received in advance. How much? 1000 rupees. Just subtract this. Subtract the 1000 rupees from 3000. What is the difference? 3000 minus 1000, 2000 rupees. So here 1000 rupees subtracted from commission, that is commission received in advance. So any amount received in advance, that should be subtracted from the respective income. So when you subtract this amount, what is the effect? Just refer that logic. So when you reduce any amount, any item which decrease credit, you need to enter that amount under same side. So here you have subtracted 1000 rupees from commission received, no, which means it decreased the credit. Again you need to record this amount under credit side. So which one is credit side in balance sheet? Liability side. So commission received in advance. How much? 1000. Enter. Now see the problem. You have entered commission. Next item. Commission received you have entered. Next one is general expense. So for general expense there is no adjustment regarding this. Directly you can enter this amount under profit and loss debit side. To general expense, how much? 12,000 rupees. Outer column 12,000. Next, salaries. In salaries you have to refer adjustment because adjustment is there. Salary is 7,500. So salary is also is an expense for the company. It should be comes under debit side of profit and loss account. Profit and loss account debit side to salaries. How much? 7,500. Just see the adjustment. Yeah, fifth one. Salaries paid in advance. So any amount paid in advance or received in advance or prepaid or pre-received, that should be subtracted. Outstanding means add, paid in advance or received in advance, that is pre-received or prepaid should be subtracted from the respective item. Here salary paid in advance, you need to subtract this amount from salaries. Why? Because this amount is paid in advance, which is not related to current year, which is related to next year. So you need to subtract this amount from salaries. Minus prepaid. Prepaid salaries. How much? 500. Subtract. What is the balance? 7,000. Enter outer column. What is the impact? When you subtract prepaid salary, it decrease or increase? It decrease the debit balance. So you need to enter the same amount under which side? Debit side. Because it reduce the debit, no? You need to enter this amount under debit side of balance sheet. So in balance sheet, debit means asset side. Asset side. Prepaid salaries. 500 rupees. Then next, see the problem. Salaries you have entered. Next one, discount received. Discount received means it's an income because it is given under credit side. Discount paid means it will be expense. Discount received means it is an income. So enter this amount under profit and loss account credit side. I told you, no, profit and loss account, it's a nominal account where we used to record all expenses under debit side, all incomes under credit side. By discount received. How much? 4,000. So no adjustment regarding this, so that you can directly enter this amount under outer column. Next, capital. This will be recorded in balance sheet liability side. Sales is already entered. Bank loan also liability item. Creditor also liability item. Purchase return is entered. Sales return is entered. Investment asset item. So there will be no other profit and loss account transaction. Now we can go for balance sheet. So balance sheet you have to start with capital. Just write capital here. That will be the first item. Capital means the amount which is invested into the business is called capital. So how much capital is there in this problem? 1 lakh. No, enter this amount under inner column. Why? Because there is an adjustment. How much? 1 lakh rupees there. No, just enter that amount inner column. And then just refer the adjustment. Sixth one, interest on capital 6%. Any interest, whether it is interest on capital or interest on drawing or interest on bank loan, that should be add along with the particular item. So interest on capital, no, just add interest along with capital at 6%. Add interest on capital. How much? 6%, no? 6,000 rupee. What is the total? 1,06,000 rupee. What is the effect when you add interest along with the capital? This will increase or decrease? Which increase liability. If any item which increase credit, simultaneously you have to enter that amount under debit side. You need to increase debit side also. So enter this value under debit side of profit and loss account. So profit and loss account debit side to interest on capital. How much? 6,000 rupees. Then next one. So capital you have entered, interest on capital also added along with the capital. So what is the next item? Just see the drawing. So what is the format in balance sheet? So first you need to take capital. If there is any interest on capital, that should be add along with the capital. The next step is if you have any drawings means the amount which is withdrawn from the capital. The proprietor already invested some amount into the business, no? From that amount, he withdraws some amount for personal use. It's called drawing. If there is any drawing, that should be subtracted from capital. Drawings. How much amount is there? Drawing 5,000 rupees given under debit side. Drawing means the amount which is withdrawn from the business is called drawings. Okay, so you cannot enter this amount under asset side. Why? Because this amount is subtracted from the liability, from the capital, so that it should be subtracted from capital, so that it will be comes under debit side. So in liability side, less drawing. How much? 5,000 rupees. What is the balance? 1,01,000. Then just see the adjustment, because in drawings we have some adjustment. Just refer the adjustment. Interest on drawing at 5%. Already drawing is the amount which is subtracted from capital. If there is any interest on drawing, again you need to calculate 5% on drawing. That should be subtracted from capital. Why? Because drawing is the amount which is taken from capital. For that the company need to pay some interest. Okay, so that will be subtracted from capital. Interest on drawings. How much? Interest on drawing 5%, no? So 5% on 5,000, 250. What is the balance? 1,07,50. So this is the amount which is taken from adjustment. If any adjustment, whether it is a added item or less item, that should be shown in other side also. Okay, so this interest on drawing is subtracted from capital, no? Which means it decreases the credit. If any item which decrease credit, you need to enter the amount under same side, that is credit side. Enter this amount under credit side of profit and loss account. So profit and loss account credit side by interest on drawings. How much? 250. Okay, then so drawing is over. Next, bank loan. So all the items we have already entered. Now we have to see the remaining item. Next one is bank loan. How much? 40,000 is there. So bank loan means it is a external liability. You have taken amount loan from bank, it is a liability. So just enter this amount under liability side, inner column. Why? Because adjustment is there, no? Just see the adjustment. Bank loan 40,000 here. Interest on bank loan 300 rupees. Any interest that will be added along with the respective account. So interest on bank loan should be added along with bank loan. Under liability side, add interest on bank loan. How much? 300 rupees, no? Just add. What is the value? 40,000 300. So when you add interest on bank loan along with bank loan, it increase credit balance. Simultaneously you have to increase debit also. So enter this amount under debit side of profit and loss account. Profit and loss account debit side to interest on bank loan. How much? 300 rupees. So this entry also over. So bank loan is over. Next, sundry creditors. Creditor means it's a liability. Okay. So enter this amount under liability side of balance sheet. Okay. So just refer the adjustment because adjustment is there. Enter this amount under liability side. Sundry creditors. Enter this amount under inner column and refer the adjustment. For sundry creditor, adjustment is there. Yeah, last adjustment. Provide 5% discount on creditors. Our supplier or creditors allowed 5% discount. Okay, so you need not pay 40,000 rupees. They have allowed 5% discount. Which means it decrease our liability. Okay, just subtract 5% discount on creditors. So you need not pay 40,000. They have allowed 5% discount on this amount, 2,000 rupees. So now you are going to pay only 38,000. Okay, so any item which decrease liability, it is just like an income. So instead of 40,000, you are going to pay 38,000 only. So 2,000 rupees is gain, no? So this will be recorded in profit and loss account credit side. Why? Because according to the logic, if any item which decrease credit, liability is a credit balance, no? Here you have subtracted this amount, no? Which means it decrease the credit. Again you have to enter the same amount under credit side. Credit side means profit and loss account credit side by discount on creditors. How much? 2,000 rupees. Next, so all the transactions have entered. The last item is investment. Investment is an asset. 5,000 rupees is there, no? Just enter this amount under asset side. Before that, just refer the adjustment. Because we have made one mark, no? Just refer the adjustment. This we have already entered. Yeah. 10th adjustment, interest on investment. I told you, no, any interest that will be add along with the respective account. So add interest on investment along with this investment. 5%, no, just go to balance sheet asset side. Investment 5,000 rupees, enter inner column. Add interest on investment. How much? 250. Just add this. What is the answer? 5,250. So this amount you have added. What is the impact? When you add any item under asset side, it will increase debit. If any item which increase debit, simultaneously you have to increase credit also. This is the logic, no? Just enter this amount under credit side of profit and loss account. Profit and loss account credit side by interest on investment. It is an income. Okay, just enter credit side 250. Okay, then again just see the problem. We have entered all the item under trading, profit and loss and balance sheet according to the rule, and we have incorporated all the adjustment. Once again you just check it out. So everything we have entered, no? Now you can go to get the total of profit and loss account. So before you get the answer, first check which side is highest value, debit side or credit side. So according to this problem, credit side is higher than the debit side. So credit side 61,000 is there. Just enter that amount under credit side. Enter the same amount under debit side also, so that you will get balancing figure. Just find the balancing figure in this problem. What is the balancing figure? 22,695 to net profit. If you get any balancing figure this side, it will be a net loss. So according to this problem, we have got net profit, no? This will be transferred to balance sheet. 22,000. So both the sides we have got 61,000 and 61,000. Now just add this amount along with the capital. Come to balance sheet. Capital is there. Interest on capital added along with the capital. Drawing means the amount which is taken from the capital. So subtract any interest on this, that again you have to subtract. This is the balancing figure. No, along with this you need to add net profit. So add net profit. This is a format. How much? 22,695. What is the total? 1,23,445. Okay, so all these things have entered. No, now we can get the total. So after entering all these things, you will get the equal value. Both assets and liability will be equal. Just find the total. $2,03,245. I hope you all understand this video. Please give your valuable comments and like and share. Thank you.